Just want to accept that. Okay, so welcome to another free revision session where we are going to be reviewing your bookkeeping transactions and then your bookkeeping controls modules. And we're going to be looking at task 6 from both of the mocks that you should have received through. So we'll review bookkeeping transactions first, and then we'll do bookkeeping controls. And my name's Karen, so I'm going to be your tutor for tonight. Any questions, drop them into the chat box. Hi, Anissa. Thank you for doing that. So I'm going to start my screen share. So while I just flick over onto my other screen so I can write out the questions for you. Bear with me 1 second. Hope you're all doing good and enjoying the nice weather while we've still got it. I've been teaching all day today, so I haven't actually been out, which is sad, really. But I've just got someone else. Oh, someone else was just joining, but they seem to have left. So, yeah, I haven't seen the day today, so hopefully you've enjoyed your nice day. But we're now going to focus on your bookkeeping transactions, bookkeeping controls. So if I start with bookkeeping transactions first, it's on page 15 in that mock one that you should have received. So we've got a little breakdown of task 6. So it looks at day books and transferring that information out into our general ledger and into our subsidiary ledgers. So when we're thinking about our general ledger, we're going to need to do a full double entry. Whilst the subsidiary ledgers, and they might be called the sales ledgers or the purchase ledgers, these are just the individual customer or supplier accounts. And therefore, you're just doing the entry in that relates to the same entry that went into the control account. So whatever happens in our control account in the main ledger, we're doing the same in our subsidiary ledgers, whether it's sales or purchases. So knowing your double entry in the first place will then help you when you're doing your individual subsidiary ledgers. So 12 marks on this task, about 9 minutes in the assessment to complete it. And they can give you any one of the day books to do the double entries and then the updates to our subsidiary ledgers. So we've got a rundown here of all the different day books that we can come across. So our first one, our sales day book. Remember, if we've got our sales day book, this is our customers that we have sold goods to on credit. So we've made a sale, but they haven't yet paid us. So we are keeping a track of what they've purchased from us and therefore updating their subsidiary ledgers to show the total amount that they owe to us. But in terms of the double entry that goes into our general ledger, our sales ledger control account, which is our trade receivables, that's the asset in terms of the customers that owe us money. So it's the total amount of everything the customers owe us, for all of our customers. So we're recording that as a debit to show the increase in that asset. So do remember your dead click. This is all about your increases to these accounts. So if we're increasing an asset, therefore we're going to do a debit into the asset account. We're going to credit our VAT because that is a liability. We owe that VAT to HMRC on our sales. And then we will credit the actual sales account to show the income that we've got. Individual transactions. Oh, we've got another person joining. Bear with me 1 second. Individual transactions will go into the individual customer accounts. And like I said before, we do whatever we do in the control account. So because we've done a debit into their increase in the asset, we will debit the individual customer accounts as well to show that they owe us for those sales. If they make a return, we're going to have our sales returns day book. And therefore, we're going to do the opposite of what we've just done above. And we're going to introduce the sales returns account. So we're going to take the money out of the control account to decrease our assets. So it's reducing the amount that is owed by our actual customers. So we're going to credit the sales control account, and then we're going to debit the VAT, get that back from HMRC. We don't owe that to them, so we can reduce our liability to them, and then record the sales returns, which will reduce the profit of the business. Again, like we said, anything that we do in our control account, we're going to do the same into the actual subsidiary sales ledger account. Any discounts as well are also going to further reduce what our customers owe us. If we're giving them a discount, allowing them to take it, then that's going to reduce what they have to pay us. And obviously, if we've done it through our invoice and recorded it without knowing whether they were going to take the discount or not for early payment, then we'd have recorded the VAT at the amount if they hadn't. Therefore, if they're now taking that, we're going to take the VAT back out from HMRC and we're going to debit our discounts allowed, which therefore reduces the profit of the business. So again, whatever we're doing in our control account, we'll do the same into our individual subsidiary ledgers. If we move on to our purchases daybook, this is our liability now. So when we're thinking back up to here to our dead click, if we're increasing a liability, we're doing a credit onto our liability account. So when we're making our purchases now, so we're the customer, we're buying from our supplier and we're going to owe them the money. We're not going to pay them straight away. So instead of the money going out of our bank account, instead we're going to actually record a liability that we owe someone money because we haven't yet paid them. So we're going to credit our purchase ledger control account or our trade payables. The other side of transactions, because we've made purchases and we're paying VAT, we can claim that back. So we're going to debit our VAT account because that's going to be reclaiming the amount from HMRC, reducing our liability. And then we debit our purchases. Remember, this is an expense. We're increasing our expenses every time we are making a purchase, and therefore we debit our purchases. In terms of our control account, if we're updating our subsidiary ledgers, then we're going to do the same in our subsidiary ledger account as well. So we'd show the liability we owe our customers money. So we'll credit our subsidiary purchase ledger. If we therefore make a return, we're going to reverse out those transactions and we're going to introduce that purchase returns instead. So we'll debit our PLCA, reduce that liability. We don't owe them any money anymore if we're returning our goods to them. We therefore can't claim back the VAT. So we're going to credit the VAT account to counteract that initial input VAT that we tried to reclaim. And then we credit our purchase returns. This helps to reduce that expense in terms of our purchases. And therefore, we've recorded all of our transactions. Whatever we do in our control account, we'll do the same in our individual purchase ledger account to show the reduction in the actual supplier amount that we owe them. So we'll update the main ledgers and therefore then go in and update the subsidiaries. And then if we're given the opportunity to take any discounts, we're going to do the same thing. It's going to reduce our purchase ledger, so we will reduce our individual accounts. The other side of that double entry is to show that we will no longer be able to claim back that VAT. So we credit the VAT to reduce that input back that we'd reclaimed prior to this, and then credit our discounts received to show it as if it's a reducing the expenses that we've suffered in terms of our purchases. So there are all the double entries. In terms of the ones that I've kind of highlighted there in orange and in yellow, they're the ones that we're going to need to remember for this task where we're updating both the general and the subsidiary ledgers. Remember, they can hit you with any book they want in the actual AAT exam. So if we scroll on down to page 17, we'll see that in this task, they're talking about the sales day book. So it says the following transactions all took place on the 31st of May, and these are credit transactions, and have been entered into the sales day book as shown below. No entries have yet been made into the ledger system. So you can see our sales day book, 31st of May. We've got all the details of these individual companies. We can see our invoice numbers going in numerical order. That's good because that's how we should see them processed into our system, so we can keep track of all the individual invoices. We've got our total column, our VAT, and then our net. So if this is a sales day book and they were asking us to update the subsidiary sales ledgers, that means we're updating the individual customer accounts. So when we're putting the entries here in terms of account names, what are we going to start using? Yes, of course, Anissa. Have you not received it? Have you not got either the any of the actual files? I might be able to try and do it now while I'm talking to you. Bear with me 1 second. I'm just going to try and see if I can find it. You should have been emailed it, I think, when you oh. Yeah, I might have to email that to you separately because I don't know if I'm going to be able to get into it. Bear with me 1 second. I might be able to do it. You're testing my knowledge of, of Zoom calls and adding attachments. But I'm up for the challenge. Let me just try. Da, 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 da. Let's see if I can do the other one. So you should have them now. Did you get those, Anissa? So you should be able to download them from that chat box. Hopefully that will help you as you follow along with me. So in terms of the individual subsidiary sales ledgers that we need to update, we're going to take the actual name. So in our pick list, you'll see that they're dropped into the middle of here. And so we're going to just add those in under the account name. So we've got Rome Limited, Paris Limited, Barcelona PLC, and we've got Ipswich. Oh, it's all going wrong. It won't let me. My spelling won't be corrected there. Okay, let's see. I can try and email those to you. Not a problem. Okay, so we're going to put through the amount. And where are we going to take the amount from? Are we going to take it from the total, the VAT, or the net when we're going into their individual accounts? What column do we take the amount from that we're going to post to each individual account? The total, the VAT, or the net? What one are you going to go for? That's right. We're going to go from the total account. So 120, 180, 300. We're just literally copying the information from above to go into our subsidiary ledgers. And if these are our customers that owe us money, into our control account, if we look back to our double entries, into our control account, we would be doing a debit into our control account, which will help us into the next task, into part B. So therefore, we're going to do the same in the individual subsidiary ledgers. We're going to debit all of those to increase the asset to show that they owe us the money for those invoices. In terms of our main ledger, remember, we're going to update that control account. So our sales ledger control account, I'm going to abbreviate to SLCA because my writing's far too big for this. And we're going to put the total. So whatever we see on this total line, we're going to update. So our sales ledger control account, we're going to update for the full 1560. We're going to debit the sales ledger control account. The other side of that is the VAT. And then our net column. Remember, the net column relates to the net sales that we've made. So our VAT of 260. And then in our sales account, we're going to update the 1,300. So remember, we've increased the asset by doing the debit. Therefore, we're going to increase our liability and increase our income. So these entries, remember in our dead click, we see liability and income on the credit side. So we're going to credit our VAT and our sales account with those two entries. And we can see there, our debit matches up to our two credits. We've got equal debits and credits, and that's what we're aiming for. So that's task 6 in our bookkeeping transactions. Any questions at all? Pop them in the chat box. If not, we're going to move on to the control accounts. So task 6 in this one, this is about updating the cash book. So this is split into kind of two tasks. We see task 6 and task 7 in this bookkeeping controls tasks are all about your bank reconciliations. So we are going to be asked to perform bank reconciliation. With task 6, which is the one we're going to deal with tonight, it involves identifying items that are missing from the cash book and then updating it and balancing that cash book. With task 7, which we're going to do next week, and we'll tie it in with our bookkeeping transactions task where we deal with cash book entries, it will be actually identifying the missing items and then using them in the reconciliation statement. So remember, with task 6, you've got 10 marks available, giving you about 7 minutes to complete it. So with this one, it says there are likely to be items included on the bank statement that have not been entered into the cash book of the business. So it's always a case when you get your bank statement through, you might have had some transactions that you don't actually know have gone through yet. Things like bank charges, or if you've had any interest that you've received, anything like that, you might not be aware of or might not actually know the amount that you're going to be receiving. So therefore, anything that's on our bank statement that we weren't aware that we were going to get or weren't aware of how much it was going to be, we haven't included in our cash book. So we have to look at that bank statement and then update our cash book. So when we're doing that, anything that goes into our bank account, into the paid in part of our bank statement, that's going to go into the debit side of our cash book, because that's going to increase the asset of the cash at the bank. So you don't often see things that you're not aware of. There might be a couple missing from the cash book you need to add on to the debit side of that cash book. In terms of the paid out, it's very similar. We should be aware of what's going out of our cash book. We're going to look at the paid out side and compare it to the credit side. And again, you might just get a few figures that are missing that you need to add in. So we don't need to worry about anything that's kind of missing from our bank statement. We're only updating the cash book in task 6. So once you've updated the cash book, you can then balance it off using the usual way. So when we're doing our balancing off, we look at both sides. We look at our debit side, add up the figures that are on our debit side, then add up the figures on our credit side. The greater total is the one that we're going to use, and we'll put that into the total box on both sides. We then work out our balancing figure. So remember, that's the difference between your highest and your lowest side. That becomes your balance carried down, and that's put into the smaller side of the account. And then it's brought down on the first day of the next period. And this is going to be on the opposite side of the ledger account, to be the opposite to the balance carried down. So what we're going to do is, oh, let's just let that person back into the room. We lost you for a second, but you're back. So in terms of this task 6, we're going to do our little comparison of our bank statement to our cash book, spot anything that's missing, and then we're going to add it into our cash book and balance that. So task 6, on the 28th of June, Dippy Dogs received the following bank statement, and this is at the 27th of June. And we can see our paid in column. So we're going to compare that to the debit side of our cash book. And our paid out column, which we're going to compare to the credit side of our cash book. We've just had another person join in. Hi, you've just joined us, but we've been going since 6 o'clock, so you're coming to the end of our session. We're just going over task 6 in the bookkeeping controls revision pack and looking at doing a bank reconciliation as you just joined. So we're going to compare the paid in column to the debit side of our cash book and the paid out column to the credit side of our cash book. So you can see all these different transactions going through this list. And then if we look on the next page, we can see here is our cash book. Remember, the cash book is divided into 2, just like our T accounts. This is our debit side. This is our credit side. So we can start with the debit side first. You can see we've got transactions there for Pant Limited for 2,000, SIP for 3,000, and Hill for 4,000. So if we look back up, and we're now comparing it to the debit side of our cash book, we can see we had the 2,000 and we had the 1,000 going through. We've only got the 2,000 in here that we can match. We can't match that 1,000. So that 1,000 in terms of the 14th of June, the BACS transfer, we're going to need to put that in. So we need to record that as of the 14th of June because that's when it occurred. And we can see it was from Hound. And it was for 1,000. Remember those other transactions that we couldn't match up. We're not worrying about them in this task. We're just entering in anything that we haven't got from the bank statement into our cash book. So we can enter those in. Then we need to start comparing things that we can see in our paid out column. So now we're going to look to this column and compare it to the credit side of our cash book. So we have the 2, 3, 4 and 500 check numbers 2, 3, 4, 5 and 6. So if we look back up, we should see we've got the 200, that's fine, we've got that in there. We've got the 300, we can match that off. I'll lie to you then, we haven't got the 300 on that one. Let me just delete that one out. We've got check number 4, that 400, check number 5. We've got that in there. Check number 6 for 600, we've got that in there. We can see electricity for 250 and rent for 350. We've got those in there. So things that we haven't got. The only one that could be kind of causing us any problems is this check for 100. But really, if we look at this balance brought down here, we can see it was 2,400. Yet we've got a balance brought down here of 2,500. That's an overdraft. Remember, when we've got a debit, that's our overdraft balance. So it looks like we've kind of accounted for that in a previous page on our cash book, because this is an overdrawn bank balance. So if we then included that 100, we'd already included it in our cash book to show that we've gone down to 2,500, which is where this cash book starts at. This bank statement will start at after that £100 gone through. So things that we haven't got that we're missing are things like the bank charges and the overdraft fee, things that you would expect to be missing from our actual cash book. So we can write those in as of the dates that they occurred. 27th of June, bank charges of 50, and 27th of June, our overdraft fee of 150. So we'll pop them into the credit side. So 27th of June, we've got bank charges. My writing is far too big for this book. I'm not going to fit it all in, so I'll just spread it across 2 lines. And that was for 50. And then also on the 27th of June, we've got our overdraft fee. And that was for 150. Again, with this task, even though we know that that check number 3 hasn't gone through the bank account yet, we're not at that part of the reconciliation. We don't need to worry about that one. So it was just more adding in things that were on our bank statement that weren't in our cash book. So then we've got the job of adding up each side. So we add up the total on our debit side. So 2,000, 3,000, 4,000, 1,000. That means that the debit side of our cash book totals 10,000. We do the same on the opposite side, and we add up all of the entries that we can see on that credit side of our cash book. So if you add down that list, see what we get to, and then pop it in the chat box. Hopefully you've all got your calculators to hand. And you can add up that credit column. Yes, perfect, thank you. That's 5,300 that we've got on the credit side. So remember, whatever one is the highest, that's what we're going to insert as our total line. So that total is going to be 10,000 that we're going to pop into here. And what we do, knowing now that our credit side is the lowest side, we do the difference between the debit and the credit side. So our 10,000 minus our 5,300, that gives us our difference, which is our balancing figure of 4,700. So we're going to put that in, and remember, look at the information they give you. They tell you to put the balance carried down on the 27th of June as the closing balance, and then they want you to do a brought down on the 28th of June. So we insert the carry down on the lowest side. So our lowest side being our credit side, we're going to put that in as the 27th of June. Our balance carried down, remember we abbreviate that to C/D, and that's for 4,700. And then we're going to bring it down. We drag it round to the other side and bring it down. This is going to be on the 28th of June. This is our balance brought down to 4,700. So that's all you have to do for task 6 in this one. You just literally have to update the entries that are on that bank statement into the cash book. We know that there's more to come. So next week when we do task 7, we'll do the rest of, sorry, someone just jumping back in. So when we come back next week, we'll take this a step further and we'll do task 7 where we actually say, right, let's update the cash book with the entries and then do our bank reconciliation and use our actual pro forma. So that's when we'll deal with those other entries that we know they've gone through our cash book, they haven't gone through the bank. So we'll be reconciling this balance brought down to see if we can get our bank to match to our cash book. So that's to Anissa, you didn't receive the file. I dropped it into the chat box, Anissa. So it was there in the chat box for you, but I can also email it to you for you to use at home. You should have been able to open from that chat box, but not a problem. I'll email it to you as well. I'll send that over to you now. Hopefully you've got them now. The chat box is the one you're talking to now. That's your chat box. So just above, if you scroll up through this chat box, they should be in there for you. Maybe they didn't come through properly. I do apologise, but I've sent you an email now as well with them. Hopefully you've got that. Okay, Nissa, I've emailed them to you now anyway, so hopefully you've got those as a file in your inbox as well. Let me know if you don't, and we can also get, that's all right, not a problem. Not a problem at all. So any questions on those 2 tasks? How do we feel? Are we okay? Nothing's coming through. So that was our bookkeeping transactions and bookkeeping controls. Task 6. Next week we're going to do feeling confident on this one. Good, that's great, Katie. I'm glad you feel okay. That's really good. Hopefully as well next week, if you join us again, we'll do our task 7, and so we can carry on with that bank reconciliation and get that confidence level up. That's what we're aiming for. So thanks so much for joining in tonight. Any questions, drop in the chat box. If not, have a lovely evening, and hopefully we'll get to see you again next week.